Greetings, members one and all of the Salivation Nation. Why are gold prices getting such a big boost in this present crisis? Let's explore. This is an article from the national.ae business section. And most of us, the answer should be quite obvious why gold prices are getting such a big boost. And silver prices are too, to some extent, when you take into account premiums. But in reality, silver prices in many ways are relatively static, although they have gone up some since this crisis began. And when I talk about going up, I'm talking about in terms of the physical price, not necessarily the paper price or the ETF prices. But I think this article kind of does, in summation, kind of bring everything home as to why this is happening now. But it also, I think it does cause us to question a bit as far as what we have seen before and what we could see in the possible future. Because I'm not necessarily along the same line of thinking as most people in this community are. But I'll save that for a different video. But as of right now, the reality is on the ground, and we're going to kind of take a look at it, because I think this article does kind of sum it nicely with some of my thoughts in there as well. So gold prices closed last week at 7-year highs and are set to head even higher. Even if the stock market sell-off and rally is followed by another fall, similar to the pattern seen during the 2008 and 9 global financial crisis, gold prices will not suffer a further significant reversal. Precious metals offer considerable upside potential at a time when few other safe havens are available to investors, and act such as a classic hedge against a likely second leg in the bear market. For those who track the progress of the yellow metal, gold for June delivery closed last week at $1,740 an ounce, while the spot price for the metal was $1,685. Usually the gold spot and futures price trade within a few dollars. This divergence of the two prices gives traders a clear indication of where their price is going next, up. And in fact, we've even seen some bullion dealers start to quote futures prices. And of course, we've seen the physical prices and the premiums go way up, both on the selling side from dealers and even on the buyback side to some degree, although I think there's still a wider margin there than most of us would like. If you look back at the financial crisis, gold prices zoomed higher from mid-October 2008 after the U.S. Federal Reserve acted to stimulate the country's economy with the so-called $700 billion Big Bazooka. Global stock markets also rebounded in a similar fashion to the rally last week. But stock indexes then crashed again until finally bottoming out in March 2009, more than 50% of their all-time highs. Gold prices, on the contrary, did not plunge again after the initial 2008 sell-off and carried on up to the all-time high in 2011. Will it be different this time? Probably not. The Fed has just delivered some commentators dub an atomic bomb, with major economies also adopting record stimulus packages. The International Monetary Fund's fiscal monitor, set to be published next week, details stimulus measures amounting to $8 trillion being taken by global governments. The IMF itself has opened up a $1 trillion line of new borrowing facilities, and European Union signed off on a $590 billion emergency program last week. Investors and speculators in precious metals have not forgotten what such stimulus programs mean for gold and silver prices. Basically, the world is printing money, and that devalues paper currency. Meanwhile, the supply of monetary metals remains almost static, and so their price goes up. And I'm going to stop there because we do remember what happened Obviously, the financial crisis of late 2007. In fact, I think it was December of that year when they actually marked that was the beginning of the Great Recession. But obviously in 2008, 2009. But it wasn't until 2011 we saw the prices go up. But then the prices came down pretty dramatically. However, I will note that they didn't come down to the price levels that they were before for the most level. But there was that peak and then a fall. And that could happen again this time in the same regard. Exchange traded funds also are used to hold gold by asset managers, hedge funds, and private investors, added 151 tons in March. According to the World Gold Council, total ETF gold holdings reached a record high of 3,185 tons, with 165 billion at the end of last month. Demand for gold coins from the U.S. Mint soared 11-fold in March to 142,000 ounces, a surge in retail demand that may only have just started. Many online dealers are completely out of stock. However, the coronavirus is a unique one. This is not an exact copy of 2007 or 2008 and 2009. Gold buying by Chinese consumers, for example, has crashed because their retail outlets have been closed. The Russian central bank has stopped all of its gold purchases because oil prices have cratered following collapsing demand as people stay at home. There is talk of the bank might have to sell gold to help close the gap. Well, we reported on that the other day that they have been asked by the banks to increase their gold holdings again. And no one really knows exactly why Russia stopped buying, but more than likely it could be that. Of course, the ruble's in trouble as well. That said, gold is a relatively tight market, and its supply is also affected by the pandemic. Many mines around the world have shuttered to protect miners and their families from the disease. A big shift in portfolio allocation towards precious metals as protection against the expected depreciation of currencies and inflationary impact of budget deficits on a scale not previously seen outside of wartime will more than compensate for less significant market factors. But investors should also consider buying the shares of companies that produce gold and silver. Again, look back at autumn 2008. Note how these stocks did not follow the rest of the stock market until second down leg. Market leader Newmont Mining, for example, saw its shares dive with general stock market until mid-October 2008 and kept on rallying higher when the market crashed again in early 2009. Now that's if you have the stomach for that kind of thing. Both mining stocks and ETFs is a different world. Yeah, I believe you have to have a different view and more stock market savvy view on things. But my thing is the physical. I think the physical is the safest way anyway to hold on to. It's a little riskier position, I believe, especially with the mining stocks. It's not too early to buy shares of precious metal producers, the article goes on to say, and the author is not convinced this global stock market rally can hold. The scale of the economic damage caused by the coronavirus movement restrictions is so big that it's hard to see how near record stock market valuations can possibly be maintained. Stimulus packages are essential but not omnipotent in the face of record unemployment, business shutdowns, and collapsing global domestic product and serious economic dislocation. However, if these observations about precious metal prices prove correct, then you don't actually have to take a view on where the stock market is going next. The outlook for gold and silver prices is already decided by the trillions of dollars of stimulus in the pipeline. And it's not just our country, it's here in the United States, it's many nations around the world having similar measures out there to bail out and to rescue essentially the economies of the respective nations. But what does that do if everybody's doing it? Well, that just goes to show you that this could go on for quite some time. However, the coronavirus epidemic and pandemic will stop eventually, and then we'll reach a new normal. What that new normal will look like is anybody's guess. I believe it's going to take quite a while for the economy to recover, but I believe when it does, we'll have a new economy of some sort and a new probably view on how the dollar and other currencies are viewed out there. The scars of this will last for quite some time. But one thing is for sure, gold is constant. And I believe silver too. I believe silver will follow gold during this crisis. And though we may not see the ratios of gold and silver narrow, probably for some time, but I believe that will narrow some. And I believe that through it all, gold has remained constant throughout history, through all kinds of different types of scenarios and crises out there. Whenever what kind of empire or epoch or nation, gold has served its role in history. So there you have it. Post your thoughts below. Where do you think gold will go past this Easter Sunday and throughout the following weeks and months ahead? I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.